The next stock on our list is Snowflake, a game-changing company in the world of cloud computing. Through one single platform, Snowflake offers data warehousing, data lakes, and data science capabilities. Unlike traditional solutions, Snowflake separates cloud storage, or holding your data, and cloud computing, which is doing things with that data, letting you scale them independently. Snowflake empowers businesses to get more out of their data, leading to smarter decisions and better results. They also prioritize security and work on any major cloud platform, giving you flexibility and peace of mind. Within their industry, the total addressable market is valued at $248 billion, whereas their current revenue is just $2.8 billion over the 12 trailing months. This gives them massive room for expansion if they maintain their competitive advantages. Our analyst also pointed out that Snowflake is in a unique position to potentially grow revenues exponentially. Not only are they able to expand into new partnerships, they are also able to scale existing partnerships as those users increase their Snowflake usage. In terms of the revenue, the growth has been stellar over the last few years. The company doesn't have a significant free cash flow yield at the moment, but that is expected to increase in the coming years. As far as management goes, the CEO has an 80% approval rating, and 72% of employees would recommend the workplace to a friend. Although the analyst found the stock to be overvalued by roughly 10% in the discounted cash flow calculation, he pointed out the service offered by Snowflake is sticky, with high costs associated with switching to another provider. He doesn't expect to see lower prices for Snowflake stock from here.